Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Wednesday, March the 22nd, 2017. And I have the very distinct honor and great pleasure of welcoming to the show for the first time the president and CEO of Zinc One Resources, Mr. Jim Walchuck. And you can find Zinc One Resources listed on the Toronto Ventures Exchange under the symbol Z like zinc. Jim, welcome to the show.
Oh, thank you very much, Rory, for having me. I really appreciate it.
Well, I'm glad that you're here, and there's a lot of recent market action with silver and gold recently, and they both jumped up on the news of Janet Yellen making the unwise decision to raise Fed fund rates, and they've jumped up again today, which is I'm very happy to see. And how do you see the precious metals performing for the remainder of 2017? Are they going to continue moving higher? You see them winding up at the end of the year down, flat? How does the market look from your perspective?
From my perspective, call me old-fashioned, but I believe the debt is still around $19 trillion. No matter what you do to try to offset that fact is still there. I think that still sends shockwaves through the market, and I think intelligent investors are probably going to hedge their bets. I personally don't see gold dropping too much. I see far more upside than downside from a gold and silver perspective. And of course, silver is a much easier metal to get a hold of and to hold than gold is. So I think that aspect of the market is a good place to be in, personally. I really think so. Even though she's raising the rates, you notice the price of gold didn't drop.
Nope.
I think that shows you that the market is saying, "Whoa, what's going on? This is we don't know what's going to happen," and that's uncertainty. And uncertainty drives you immediately towards something that you can count on, that's more stable, and that's driving the people to gold and silver, because they just don't know what the markets are going to do or what the economies are going to do. And you do have a lot of political upheaval, which is not helping the markets in some sense right now. I know there's a Trump effect right now, but I think the honeymoon is starting to wear off a little bit. China now moving more into the TPP side of things than the role that the U.S. was supposed to play. It's what's happening with Europe. It's just confusion right now. I think everything will settle down because I think America is that strong and that great that it doesn't really matter. But right now there's just that uncertainty, and it's going to be there for the next, I would say, 6 to 12 months, maybe even 18, until the dust settles. That uncertainty is going to be there. So for gold, I think that gold and silver, I think that's, I hate to say a good thing, but I think it shows you that that's where the markets are going to lean to right now.
Well, they are. I mean, gold traditionally has been a barometer of health for economies, and the higher that it goes, the sicker the patient. And the economies, as you pointed out, not just the United States or Canada, which is where you're at. I mean, it's global. I mean, it's falling apart all over the place. And the Federal Reserve, as I mentioned a moment ago, they just raised the Fed fund rates the second time since Trump was elected. And this has the potential to impact the American economy in a very negative way. And we're starting to see a little bit of that already. And do you see this taking some of the wind out of Trump's plans for infrastructure spending? And if President Trump is able to make this happen, what type of impact do you see this having on the overall economy? Would it only benefit certain areas, or would rising tide lift all boats?
I'm more on the rising tides are going to lift all boats. I know that that the rates have gone up a little bit, but are they gone up enough to really make an impact? I think he's made a commitment to improve the infrastructure of the United States. I think that's going to happen, because I don't think the prices have gone up high to negate that. I think he's committed to do that. You saw that he's actually, rightly or wrongly, tried to do a good job on the budget, trying to find more sources for the armed forces, more financial sources. But he's cutting back on other things, so he's actually trying to do this in sort of a balanced way, which tells me he's approaching it from a business point of view. And Although I'll be honest with you, I'm not a great fan of Donald Trump. I do respect that he's trying to do that. He's trying to operate it like a business, and he's trying to have some way of trying to get money in without actually having to raise more taxes and find it in ways like that way. So I think things are going to move ahead. Having said that, if the infrastructure starts being really built in the United States, you already have that happening right now in China,
Yes.
and you have it in India as well.
Yep.
And so from a resource perspective of requiring them, the need is already there with those two major economies, and they're going to, like, if you're taking a look, for example, and a great barometer of where resources are going to go is copper. And copper's had a major rise now because China has actually, basically, they're gobbling up. I think it's over 45% of all the copper is going to China right now. Having said that, people aren't actually aware that there's a commitment now made by India to build 24 megacities between New Delhi and Mumbai. These are going to be very large cities. They're building 23 industrial parks. They're building 6 airports, 3 ports, a major highway thoroughfare, and they have a plan to move 15 to 20% of the population of these cities by 2040. Where does all that come from? They're not a resource-rich country. They will need to acquire these resources to do that as well. Combine that with what's happening with China, where I believe that China is now where the United States was back in the day, where you had such a strong middle class. It really didn't need outside investment. It was driving its own investment from its internal economics. And I think China is now moving to that aspect too. So it doesn't need to be the great big exporter, because a lot of the things that they're manufacturing are going to actually be eaten up by their own middle class, because they're starting to attain that status right now. So that augurs well for the space that I'm in right now, which is the resource sector.
Yes, I would agree. And
then if you top up with a United States economy, which is actually going to be committed to improving its infrastructure, is that not icing on the cake? All boats rising with the tide?
Well, we hope. China,
so do I.
China is committed long-term project of the One Belt, One Road, New Silk Road initiative. And it sounds like, and I'm not familiar with the 24 megacities that India.
Most people are not. Most people are not, but it's worth investigating, because
believe me,
I will be dynamic.
I will be investigating that as soon as we end this conversation. that's
and
a big
just quickly,
deal.
Roy, if I could just say one other aspect, is that with the vacancy created by the United States removing itself from the TPP and China filling in the TPP, the best way for a country to basically become friends or do something to drive that economy and to have its influence is to invest inside those countries.
Yes.
So if China now starts investing inside places like Malaysia and inside Vietnam and things like that, that money is going to flow in there. They're going to want to build their own infrastructure, their own ports, their own airports, their own rail systems. All of that goes into, and that's money that goes in, but they don't have the resources to do that. That's resources are going to have to go there from somewhere else as well. And those will be from the places like Canada, Chile with copper, Mexico, all places that produce these resources. And that's going to have, I think, a positive effect on the price of resources going forward.
I would agree with that wholeheartedly. I mean, it has to, And I just recently learned that China lost all of their steel stockpile due to some type of weather condition, and basically the ore that they had stockpiled is now ruined, and they have to replace either all of it or a major portion of it. And it's that bodes well for what you're doing as well, as far as in the resource sector. And
absolutely,
with the threat of a border tax, I mean, how do you see a border tax playing into everything that we've just discussed as far as what's happening in China? I mean, is that realistic at this point? Because you operating out of Canada, you've got mine in Canada, and I believe you got a new project in Peru. You don't really need the United States for that. You can ship all of your product right to China, right to India, right to where there are markets that are begging for these products.
Well, absolutely. Three things. Well, two things for sure. One is we don't have a mine yet in Canada. We have two really good projects, and I'll talk about that in a little bit. But yeah, our project is in BC, and one of them, the Scotia project, and that's a one that needs exploration to beef it up, but it's pretty high grade. Where we like this project a lot, and we have the other one in Peru, which I'll talk about, which is all a little bit of, quite honestly, it's mind blowing. But both there, we would like to send to the United States because it's convenient, but we don't need that. I mean, the people that are actually going to need the product are places like China and India, and possibly Europe and other smelters that are out there. People that are manufacturing galvanized steel, which accounts for 45% of all the use of zinc out there. But that having said that, no, a border tax, and let's face it, border taxes are very convenient until you actually need the product, and then exceptions get made. And I believe there's going to be a deficit with zinc. So you'll probably find there'll be an exception made for that product. If the U.S. industry needs it, they'll be screaming bloody murder. If they can't get enough zinc from their own mines, do you think that the American government's going to say, "Oh, I'm sorry, we're going to still penalize you for doing that and drive up the cost for building your infrastructure because we're going to put a tax on zinc"? No, that's not the way economics work, and there'll be exceptions. So that's not a big concern with me. And the fact is that the price of zinc is actually moving to a nice high for quite some time. There's a rationale behind that. Do you mind if I just segue into that a little bit?
Absolutely.
Because people should understand the dynamics of zinc, because it's the ugly cousin. Nobody really talks about zinc. and it's true. I mean, they talk about copper, gold, they talk about silver and platinum, and it's all beautiful. And zinc's hardly ever talked about. It's a poor cousin. But that its time has sort of come. It's in there. The London Metal Exchange stockpiles are decimated right now. They're getting very low, which means there's not some stockpile sitting there. China have, like they did with iron, they have a problem with iron, but they have a big problem with zinc. Is that their imports have gone down because they don't like the price, so their smelters are using up all their stockpile right now, and they're getting depleted. Combine that with the fact that because China used to be a net exporter of zinc, and the government forced 26 mines in China to shut down for environmental concerns. They're polluting the areas so badly that their version of the EPA was forced to go in and shut these mines down. They were that bad. They were putting so many toxic minerals into the streams and into the air and into the environment that the people they just can't go back in and reopen these mines until they have come up with new ways to actually keep them clean. And that does not happen in months. That happens in years to determine that. So those mines have been set aside, and that caused a big problem for them. And then combine that they shut down the Lachine mine, which was a very large producer. I think it was producing well over 150,000 tons of metal a year in Ireland. That's been gone. And then MG's mine in Australia, it shut down too. I think that was a Century mine. So you have two large mines shut down, plus the Brunswick mine was shut down a few years ago in Canada, which is an extreme mine. There are no mines coming on stream for zinc. Metal stockpiles are being depleted in the London Metal Exchange. There's no new mines coming on stream very quickly right now.
Right.
And then you have the issue happening with China, which is a large user, and they're using up their own stockpiles. Unless there's a black swan that I can't see coming around the corner, all I'm trying to say is that I see that the price of metal is a good resource to be in, or the metal zinc is a good resource to be in right now from an investor, and certainly from my perspective of running a zinc resource company. Keeping in mind that we're morphing away from exploring for zinc, such as our Scotia project, into projects that we can get into production as quickly as possible. And that's now the fundamental basis of Zinc One right now. We're in the process right now of taking over a company called Forester Metals, who have a stunning project in Peru that they acquired, and my hat's off to them. They made a very, very good deal. We looked at that deal and we felt very strongly that that would fit right into our wheelhouse of moving something into production. We think we can be in production, and we're targeting, we're hoping, and the studies will tell us what we can actually do, but based on past history with this particular deposit, we think we can be producing 50,000 tons of metal a year in 36 to 48 months. And we'll try to be even more
Wow.
aggressive than that.
Wow.
Yeah, and so we're very, very focused on that. And you know what happens when you become an operator and a producer, you get the multiples on your share price on that, based on that as well, right?
Yeah. That you said that you were excited about this project in Peru, and I understand why. I mean, that's
Well, let me
50,000
elaborate a little bit
tons.
more
Yes, please.
of producing. It's got grades above 20% zinc in the ground, sitting on surface, easily mined from 0 to 25 meters in depth, maybe from 0 to 50 meters in depth. 20% corresponds to a gold grade, a surface open pit gold grade of about, say, a third of an ounce
Per ton?
per ton.
Wow.
So if you think about that, most open pits for gold are running in grams per ton. And perspective, this would be like 10 to 12 grams per ton. And we're not talking about 1 or 2 grams per ton or even 0.05 grams per ton. This stuff is sitting on surface. It's there. It's known. We're going to drill it off. We have a stage drill program, very aggressive. Exploration potential of this thing is phenomenal, but they actually have a delineated historical resource there that's ready to be brought into compliance into Canadian standards and US standards. We call it 43-101. So
Yep.
we will need to do work to do that. And we have so our first stage is about a 20-hole program, of which we will twin some of them so that we get good metallurgical core that we can do analysis on. That will speed things up and save us 6 to 12 months down the road, not waiting. And then move into a much greater drill hole program. And we're looking right now, we've outlined another total of 330 to 350 holes on this thing. We have this phenomenal deposit. It's sitting on surface. It has been mined, and it was mined profitably, but the 2008 market happened, and the company that had it was mining it, and they stopped mining it and basically mothballed the project because it wasn't the core part of their business. It was a different industrial minerals that these people normally mine, but they decided to venture into zinc. So as again, the modus operandi for our company is to take these types of deposits that are more brownfield and greenfield and get them into production as quickly as possible. And there's a process that has to be followed. We follow it. We know what to do. We know how to hire people to get it done, and we know what we expect from them. We know what they need to deliver so we can get our permits in place as quickly as possible.
Fully understand why you're so excited at this point. I mean, that sounds like an unbelievable project, and it sounds like that you're going to be able to, with the team that you have in place, the knowledge base that you're working with, the fact that it is surface mineral, it sounds like the 36 to 48 month timeline is going to be crushed. I mean, it just doesn't sound like it's going to take you guys near that long, especially since you're going to do the twin drill holes. I mean, that, once again, like you said, that knocks 12 months off right there.
We are focused.
It sounds like it.
The nice thing is both Bill and myself have already done this. This is not learning what to do. We've done it, and that past experience is going to benefit the investors.
It's going to benefit everybody. And
that's actually why I was asked to join this team, because the people that wanted to create this company had that focus in mind. So they were looking for people with certain skill sets, and I'm lucky enough to have been asked to join it, and I've been having a riot. I'm loving what I'm doing right now. Just loving it.
Well, it sounds like it. And I want to get one more question in, Jim, and then I'll let you get back to your afternoon. And from your perspective, how do you see the economy doing? I mean, you move around quite a bit, and just like you said, you were just in Peru, you're in Canada. I'm sure you spent some time in the States as well. And it sounds like you've been in Mexico and South America as well. I mean, from your perspective, how do you see the economy doing? I mean, is it declining? Is it stagnant? Is it growing? What are you seeing on the ground? as you move about?
As I move about, I don't see any stagnation where I'm going. I don't see it in Peru. Um, Canada is doing very well. I mean, people that I talk, like, right now, Canada is running into a bit of a problem because there are so many jobs that are becoming available that we can't fill them, especially on the tech side. Um, I just, you know, I I think is going to be a bit of a boom. I really do believe that no matter what Yellen is doing, I think your economy is turning around and people are expecting it to turn around. I think if you start cutting some taxes, more free money is going to turn up. You start putting that, the government starts putting things into different infrastructure and maybe even goes to PPPs, which are public-private participation agreements, which all happen. But there's lots of things that can do to drive an economy. And you have very smart people in your country, and they know what to do, probably better than anybody else in the world when it comes to doing it. Once they can get government to step away from it a little bit, it'll drive. And if you get America going strong, and you combine it with what's happening in India and in Europe, and they have to drive their own economies as well. Make no mistake, they are. And then combine that with China and what's happening in the other places such as Malaysia and Indonesia, and Vietnam, and those places. I'm very optimistic, quite honestly. I am. It's never going to be a straight line up, you know that,
Right.
But it's going to go up and then back off and up and back off, but there's just too many people in the world that really are moving more and more into the middle class, and if you get that stability happening in those countries, they all want better things.
Yes.
And that includes houses, cars, and they want to drive those cars on better infrastructure, and infrastructure begets exports, and exports begets more GDP, and as people and I it's capitalistic for sure, but as they embrace it, it drives economies and it drives a need. I see a resurgence actually as these countries now try to build up their own infrastructure and basically enjoy what the first world countries or Western countries have had for years. To me, I don't see it backtracking anywhere.
Okay.
Well, you always get blips like North Korea is trying to grab attention and things. That'll be handled. They are a small nation, petty-minded, trying to get attention, but they have behemoth nations that are watching them and who have resources in place that can take care of little things like that. But the press likes to make big things out of it, I think. But overall, they have to be wary. But when you look at the United States and you look at China and you look at Japan and you look at Europe, these people, we've been around for a while. There's a reason why they do well.
Well,
I'm very optimistic. I read a lot. I go a lot of places, and
that's why I wanted to ask you that,
I'm,
because you do,
I'm,
because I know you do travel quite a bit, and it's important. I like the fact that you travel a lot and you see different economies functioning in different ways, and the fact that you are on top of what's happening with China, with India, with their infrastructure, with all of these various aspects of the economy. All of these things play a part in what's happening here. Period.
Absolutely, Rory. Absolutely. And here's another thing, a small thing, but it's one of the little telltale signs. I don't know. Do you fly a lot?
No, I do not.
I do. And I would say out of the last 10 flights that I've been on, the last flight that I had from LA to Vancouver was on Friday. And that flight was 85% full. And that's the first flight I've been on that had vacancies out of the last 10. If you're flying to India, or if you're flying to China, or if you're flying to Lima, Peru, those flights are full, and they're full leading. People want to do business. It's not just tourists, and it's not just people going to see family. There's a reason why the business classes are all full, and the economy is full. I mean, I don't think they're pulling planes out of there to make less seats available.
Probably not.
I'm just trying to tell you. To me, it's a bit of a sign. If you travel back in 2008 and 2009, it wasn't too hard to get a good cheap flight on a plane. It's very difficult right now unless you book ahead.
Now, my wife and I are planning a major trip later this year, and so we've been looking at various uh, airlines and pricing, and the pricing is going up. So, and that tells me, you know,
I
there's
rest my case.
supply and demand. So those laws still
Yep.
apply, even though in certain sectors they try to tell us that they play no part, but they still do at the end of the day. And I said that was my last question. And Jim, I want to ask you this, and it's a hypothetical situation. If a person were to borrow against their pension funds all across America are in dire straits. I mean, there's news stories constantly about what's going on and what's been happening. And assuming that they are allowed to do so, why would or why should a person invest in Zinc One? I mean, what makes Zinc One a better bet than a mutual fund?
No, the thing is that Zinc One uh, is so committed to getting into production, but something could happen, and if that happens and Zinc One can't raise the money, then that's going to cause a lot of problems on the share price. If things go according to the way I expect them to go, then Zinc One is going to do exceptionally well. So I would say if anybody's going to invest, it shouldn't be all their portfolio, but it should be some. I mean, they should hedge. There's a good chance that everybody knows that it's the junior companies that will make you the best return on your investment over time versus
Yep.
a big stable company kicking out dividends year in year out. One is very stable, one is a lot more volatile. But if you have the stomach and you have the ability to wait for 3 to 6 or 7 years, overall, you're going to do better with. You typically do better with a junior companies than you do with a major company.
Much better.
And then you have to be very comfortable what sector that you're in. Now, is zinc a good sector? I happen to believe, and from what I've read, is that it is one of the very best sectors to be in. Its day has come. Its cycle has come. The stars seem to be aligned for a very stable zinc price. Zinc has gone from literally 50 cents to $1.30. That's a phenomenal increase over 18
Yes.
months. And yet, there are no mines coming on stream. Stockpiles are being diminished, and mines have actually been shut down, and production has been curtailed. That's kind of I would say, a star alignment for a stable zinc price and for good zinc projects to come on steam in good environments. So that's all I can tell you is that I'm heavily invested in my own company, and I plan to stay that way. And my retirement plan is definitely tied to this company in many ways. I've got good people under me, good people with me, and good people above me, and I got a great project,
And
phenomenal project.
you do have a great project, and you are surrounded by an exceptional team, and fun is a good thing to have. So,
It
and
is, it is
if you have to have
absolutely.
something, fun is definitely at the top of the list. We've been speaking with the president and CEO of Zinc One, Mr. James Walchuck, and you can find them listed on the Toronto Ventures Exchange under the symbol Z like zinc. Jim, thank you for all your time today. I certainly appreciate it, and I look forward to speaking with you in the not too distant future.
Thank you very much, Roy. Hope to meet you one day,
Yes,
face to
sir.
face.